Good afternoon, guys. So working, bringing you a quick Bitcoin update. We got Bitcoin USD pairing out on Coinbase. We're looking at the 4-hour chart. And if you guys saw my last update, guys, Bitcoin was sitting right up in this area. It was nestled right below the 6750 to 6800 resistance or supply zone up in here. And I said in my last update, I said if Bitcoin does end up testing this resistance again and breaking to the downside and not being able to break through, more than likely we were in an ABC correction and we were going to come down to around 6400 or thereabouts. Sure enough, came up, tested that area, it dropped. I got a sell position in here. I got a little short position in here sitting at around 6700. I have to admit I got a little nervous when it wicked back up into this support zone, but that's not, or excuse me, into this resistance zone. That's not uncommon for Bitcoin, and then it was completely rejected very, very hard by the bears and came back down for a hard C wave. So I played my position. I closed it at about 6450. If you guys did capitalize on that based on my last call, congratulations, guys. If not, don't worry. There'll be a lot of opportunity going forward. But now we're looking at this. We can't ignore how impulsive that wave was down, guys. That that doesn't look like a correction to me. That looks kind of like the start of a new trend. In other words, the start of a new downtrend. I'm not saying that's what's happening. I'm just saying based on this candle here, that's kind of what it looks like. Now, we're going to obviously, if we see another candle like that, that'll confirm that. I'm not saying that's what's happening, guys, at all. As of right now, this still looks like an ABC correction. Doesn't mean we've seen bottom. We still could go lower with that correction, but it does mean, I'm not necessarily calling this a new downtrend quite yet. But we do have to be aware that that is a possibility, guys. That was a very impulsive looking down wave. That was a very impulsive drop. So we've got to be aware that we may be looking at further lows. For now, we aren't seeing a bounce. I was hoping to see a nice little bounce. I closed my short position at about 6450. I opened up another quick swing trade at about 6400. I was stopped out when I had my stop very, very tight. I was stopped out at about 6330, so I'm not in a position right now. But the market's looking very weak, guys. We didn't see the bounce that I was hoping for out of this demand zone. It's now just sitting there consolidating, moving kind of sideways. The 4-hour candle has opened and closed, so it's been sitting there for over 4 hours now, just not moving. And the question is, which way is it going to go next? Guys, I wouldn't be surprised to see it kind of play something like this. I wouldn't be surprised to see a little trip up and then come back down and test the 6145 to 6070 support zone down in this area. I'm not saying that is going to happen, but it is a possibility, guys. It certainly is a possibility. If price does break below this the bottom of this 6330 zone, certainly if it breaks below 6300, then more than likely we're going to head down to the support zone of 6145 to 6070. So we're going to have to wait and see how this goes, guys. This just doesn't look like a bottom of a C wave. Normally, if this was the bottom, that would mean we would be starting an impulse wave up, and this does not look impulsive whatsoever. We have no volume following through at all. So as of right now, guys, market is looking very, very, very weak. Excuse me. Zooming out, again, we're looking at the 4-hour, guys, the 4-hour chart. You guys, remember, this was the top of the last rally that didn't get quite to 10,000. It got to about 9990 or thereabouts, and this has been the downtrend that we've been in ever since. And guys, I mean, are you seeing a pattern here? We had a nice little drop, little bear flag, bigger drop, bigger bear flag, another drop, bigger bear flag, another drop, bigger bear flag, bigger drop, bigger bear flag, bigger, not as big of a drop, but certainly if this is in fact another bear flag, certainly another bigger bear flag. So this pattern is becoming very, very, very common, guys, where we get this little bear flag followed by a massive impulse wave down, little bear flag, massive impulse, bear flag, massive impulse, big flag, and so on and so on. Is that what's happening now? Well, we're going to have to keep an eye on this and see, guys. I'm not sure. I'm not sure if that's what's happening, but it's certainly something we have to be aware of and we have to be ready for if that is what happens, guys. Certainly. For now, this is a no trade zone for me. I may do another, I may do another quick short down if it drops below to 6300. I may do a short down to about 6150. Just little trades here, guys. I usually do little small scalp trades of 1.5%, 2%, 3%. My bigger ones. But that's just my style. Everyone's got their own style. But for now, guys, we're just waiting to see what price does. Waiting to see if it breaks out of this little flag that it kind of formed here. And if it does, we may see we may be on our way down to that 6100 support zone. So gonna have to wait and see what happens, guys. Remembering that we are, you know, we did break past this massive descending resistance line, guys, but bigger picture wise, you know, we are still in a downtrend. We are still keeping our eye on that 6,000 to 5800 support zone, and remembering this massive descending resistance line, guys. If price does continue to operate to the side here, I wouldn't be surprised to see price just kind of bounce in between this massive support and resistance until it gets closer to the apex, and then break out in one direction or another, hopefully to the upside, guys. We need new money to enter this market. We need new investors if this is going to be a sustainable bull run. And as of now, we're just not getting those investors, guys, not at all. So from an Elliott perspective, guys, my count remains the same. Where I believe we are still looking at five prior waves up. I told you guys if price broke down, we were in an ABC correction. Price did break down, so I do believe that we are in an A, B, and this being the C wave, and we're just looking for bottom of this C wave. Excuse me, guys. Now, if we do get a little break up, does that mean that we are in an A, B, C, D, E? That's very possible, guys. We may be looking at something like this. Again, if we don't get a massive increase in volume very soon, then we may be looking at something like this, an A, B, C, D, E. Yeah, not sure. We're just going to have to wait and see how this plays. If we do get a nice spike up and we get a nice follow through in volume, then we're going to be looking at this zone here where it's going to be acting as what was resistance will be acting as support. Or excuse me, what was support will be acting as resistance. We're going to be looking at this support here, possibly to get some resistance. If price can break through this zone, that would be a bullish sign, showing you that the bulls are still in this fight. And of course, the major zone that we have to get past, guys, if we are going to have a sustainable bull run, the major thing that we need to look at, guys, the thing that we have to crush through is this 6,800 resistance. This has to get taken out. And if it's not taken out in the next, I'd say in the next few days, certainly in the next week, if it's not taken out, guys, then we're more than likely going to come back down and continue on and continue lower, unfortunately. So these are my quick thoughts on Bitcoin. Looking at the histogram, guys, you know, oftentimes one way to tell if we're in a healthy correction or if we are going to be looking at new, possibly testing the prior low, is to come back to the prior low prior to the upswing. So prior low to the upswing was right around at this area, right around at this wave 2 area here. That was the prior low of this kind of impulsive wave up, or not so much. You know, this was more of a correction here, guys. But you know, kind of the swing low to swing high. This was the swing low of the last swing low. Excuse me if that's I can't talk, guys. But you know what I'm saying. This low, the last low zone that before we started our wave up, this demand zone down here was right around in this area, right around in 5837 or thereabouts. And one way to test whether or not you're in a healthy correction or whether or not you may be in the beginning of a downtrend is to come down to the histogram and kind of test and see if you've got bearish divergence. We can see that, you know, obviously there was an uptick in price here, even though we had this breakdown. We've got this overall an uptick in price. And if we look at the histogram from where this low was to where we are now, even though price is higher now, our histogram is lower. You know, by definition, that is bullish divergence, and that tells me that we may be in for a continuous, the continuation of this downtrend, I should say. Now, is that a definite? Absolutely not. Absolutely not by any means. But it is curious. We aren't seeing the volume. You know, we did see this impulsive wave, or what looks like an impulsive wave down. We do have bearish divergence, so you know we're just seeing signs of weakness throughout the market, guys, and we can't ignore them. So we just need to be prepared for possibly getting ready for to test some lower lows here. Looking at the daily RSI, we can see that it tested this descending resistance line and was massively rejected, which brought us into this downtrend that we're in now. Not necessarily a downtrend, guys, but this drop that we had recently. And so we're going to be watching this daily RSI to see if it can again come back up and test this resistance. See if we can break through this resistance. Let me get a drink of water, guys. Stand by 1 second. Okay, sorry about that, guys. One thing that we are, where was I here? One thing that we are looking at, guys, is we are seeing, you know, obviously that this is operating in a wedge. We do have a nice support zone all the way down here at about 26.7 RSI. This massive descending resistance line here Price has been, or excuse me, not price, but the RSI on the daily here has been operating within this wedge, is getting squeezed tighter and tighter. I wouldn't be surprised to see it continue to operate within this wedge over the next month and a half or so. I'm not saying it will, but I wouldn't be surprised. And then as we get closer to the apex of the wedge, we see a nice little breakout, hopefully to the upside. That does jive well, interestingly enough, that does jive well with this massive descending resistance line on price, looking at the daily chart, and this support zone here between 6,000 and this massive descending resistance line here. As I said, we might see price just kind of operate within this zone, and as it gets closer and closer to the apex, hopefully see a breakout to the upside. Now, is it possible it breaks to the downside? Yeah, that's possible, but I believe that we are looking at an A, B, C, D, E correction. All of this would jive. If we look at this, how would an ABC correction play out? I believe that we're in an A, B, C, D, and E correction. So if we look at just the timeline of all of this, we'd be getting towards the apex of that right around, if this was in fact where the E was, somewhere in this area, that would make perfect sense. That would be somewhere in the neighborhood of the end of August. Whoops, just get rid of that. That'd be somewhere in the neighborhood of the end of August, beginning of September, and that would jive. There we go. That would jive very well. As we're saying here with this resistance, that would be somewhere in the neighborhood of this resistance and this support getting closer and closer as it gets tighter and tighter to the apex of the wedge between the resistance and the support. We can see that the apex jives very, very well right around the end of August, beginning of September. Also, looking at the RSI, the same thing. RSI is getting squeezed tighter and tighter. We can see the apex comes right around the end of August, beginning of September. So that, I wouldn't be surprised. I'm not saying it is going to take that long, but I wouldn't be surprised to see this kind of get played out into a longer time frame and get drawn out into a longer time frame. That would also jive with, as we're seeing more and more every time we get a rally. I'm calling them guppy rallies, guys, because they're just weak rallies. Every time that we get a weak rally, it's getting more and more lopsided. It's getting more and more less and less impulsive, I say, more and more moving to the sideways direction. We can see, this, once we had a drop down to about 11,000. We had a nice impulse little rally up down to about 17,000 here. We can see the trajectory of that versus the trajectory of this rally here. Actually, the two trajectories of those were almost the same. But then once we get to that third trajectory, that third rally, we can see that we really lost steam. Actually, they're not the same. I didn't draw that correctly. There we go. So we can see that, this one was almost the same, but still just a little bit slightly weaker, slightly moving to the side. By the time we got to that third rally, guys, we had less buyers in the market. The volume has been dropping off consistently. Less and less people are willing to take the chance, are willing to take that, to take the buy, and willing to bet that the market is going to continue to rise up. That's why we get this trajectory more sideways. And as we continued on, we got this third rally. If this is in fact a third rally, look at the trajectory of this market. We can see that it's just, it's getting more. It's getting weaker with each attempt to break out. With each attempt at a bull run, it's just getting weaker and weaker. There are less and less buyers in the market. Less and less people are willing to do this. And I wouldn't be surprised if we somehow, we may be seeing the top now, and then it just kind of topples back over, or we may get a little more swing to the upside, or even more sideways before it topples back over, tests the low, or even creates a new low for 2018. I'm not sure which it's going to do. It depends on what it gets down to. We'll know when it gets down and tests the 5900 support. If and when it does come down and test the bottom of this support again, if it does break through, I'm expecting it to hit this ascending support line here, and then it'll probably come down and test about $5,000 before we head up. But for now, guys, if we look at all the evidence, we have to say that the market looks weak. Volume is weak. We have to look at the fact that we are seeing continuation of that pattern where we get the series of bull flags, followed by it being toppled over, followed by more bull flags. We can't ignore what we're seeing, guys. We can't ignore the weakness in the market. We can't ignore how impulsive that wave was down. I'm not saying that this is over, but if we are to continue to the upside, again, we have to take out this massive resistance at 6,800. And with that, guys, I'm going to go ahead and wrap. Sorry, I got a little long. If you have any questions, comments, suggestions, please let me know in the comment section below. If you have liked this content, please remember to re-steam or upvote. I certainly would appreciate that. Just lets me know you guys have enjoyed the content and you want me to continue to do this. And until next time, guys, please be safe. This is Workin signing out.